If your renewal conversation starts with rate, you've already lost. Most mortgage brokers lose renewals because they don't have a structured way to have a conversation. In today's podcast episode, I give you a 5-part framework to help you uncover every possible renewal opportunity so that you can help that client and serve them for the long term. Are you getting killed on renewals? If so, you're going to listen to this episode. I'm going to share with you how to turn renewals into refinances. Hey, I'm Scott Peckford, the founder of I Love Mortgage Brokering and Bricks Mortgage. Bricks Mortgage we founded in 2022. We did $265 million. Last year, we did $2.8 billion. That's in just 4 years. And I want to share with you some of the things that I learned coaching mortgage brokers. I've been coaching brokers now for almost a decade. Today's episode is all about renewals into refinances. And a couple things I want to say about this. First, not every renewal is going to be winnable. It's like, so remember that song by Kenny Rogers, know when to hold them, know when to fold them, know when to walk away, know when to run. It's a little bit like that. And so, but there is a framework that I teach that will help you identify if it makes sense to turn that renewal into a refi. Because if you are genuinely taking care of your clients, you should not be convincing them to do something that's not in their best interest, because it may be a short-term win, but long-term it'll cost you. I have this little framework that I use called CCPPR. And this helps me make sure that if I'm talking to a client, that I uncover all the bases. And if there is an opportunity for them to save money, if it makes sense, we're going to have it and I don't miss it in that conversation. So that's what I want to share with you today. This is something that I've shared on coaching calls with my agents and people that I coach. And I just think hopefully this will be useful for you. So CCPPR. So first is cash flow. So the first thing you want to talk about, somebody's coming up for renewal. So the way I'd frame this, say, hey, look, Mr. Customer, sounds like your mortgage is coming up for renewal in insert time. What I'd love to do is just ask some questions and figure out where you're at, because it might make sense, and always give the pushback at the beginning. It may make a lot of sense for you to just sign on the dotted line and renew. However, I just want to make sure that there's no stone uncovered, and if there's an opportunity for you to save money or to save money over the long term, that we can find it. Does that sound fair? You do that at the beginning, they're like, sure, that sounds great, Scott. Now I've opened the door for me to have this discussion. So the first is about cash flow. So I'm going to ask questions about cash flow, find out if anything in their cash flow. So currently in your cash flow situation, do you have any outstanding debts outside of them? Sounds looks like you got a mortgage for X. Do you have any other debt payments, your car payments, any credit cards, loan payments, anything like that? And ask them, get into the debt. The first part is I'm going to find out is about cash flow. Because there's two strategies here. One, obviously there's debt consolidation. So this happens all the time. You talk to someone and they're focused on the renewal and they have $40,000 in debt and they're thinking, I want the best possible rate on the renewal, but getting that debt rolled into the mortgage and reducing their cash flow by $700 a month is a way better deal for them. And it's going to make more sense for them long term. And so I'm going to ask about debt, if there's any debts. And then there's two strategies that we have. One could just be a debt consolidation, but the other one is a potential reamortization. So maybe there's no new debts, but they'd like to ream. And at renewal is a great time to look at reamming. So maybe they're like, you know what? I have no new debts, but I am feeling a bit stressed about my cash flow right now because of what's happening in the economy. Okay, cool. Maybe we can look at doing a ream at that time. So, but you're going to focus on in the C of the CCPR, you look at cash flow, the first C. The second C is cash out. The next is, okay, so first you dive into the debts. Is there anything that they've got to cover? Is there monthly cash flow? How's that feeling? And then the next is the cash out. So what I want to talk about there is, hey, do you have any, I want to ask about if they have equity, of course. This doesn't work if they have no equity. But if they have equity, if I've asked them the value of the home, what they think it's worth, what they currently owe, and if there is cash in there. So is there any renovations that you're planning in the next, 1 to 3 years? Anything you want to do to the property? Any investments you want to purchase? Is there any, RSPs? I was talking to one of our brokers, and one of the things he does is he looks at the client's current remaining RSP contribution room and says, okay, if we take money out and max out your RSPs over the next X number of years based on taking this money out, this is what you're going to get back for a tax refund because you're in a tax bracket of 37%. And then you use that to calculate the actual net cost of getting that loan. And it's like, oh, it can make a lot of sense. And most people, by the way, the contribution room is just to have a minimum retirement. It is not to have a retirement that's like a posh retirement where you can, sit back and sit my heels on the beach. And so most people have contribution rooms. So one of the areas to dig into is the contribution room and potentially use cash out. The second is, the one I'd already said was renovations. So is there anything you want to do with your property? Anything you need to do? Are you going to add a suite? Maybe your kid's moving out and you're going to want to make a big renovation. Maybe you're going to put a pool in. I want to ask about all that stuff. Anything, if you could great question. If you could snap your fingers and change anything about your current property, what would you do? Oh, well, I would like to do this. Okay. Have you figured out how you're going to pay for that? Now we have a cash out conversation. Another conversation on cash out. Any kids, depending on their age, are they going to university? Are they going to be, do you have that sorted out? Are you going to help them buy a property? Right? That's another thing to consider. Or is there any large purchases that you have planned that are coming up in the next couple of years? And this is the time to have a conversation about cash out options if they have any. So that's going to be the second thing. So the first is cash flow. I'm going to talk about debt consolidation or REAM. The next is cash out. And of course, if they have equity, then that could be done through rolling it into the mortgage. It could be done through adding a line of credit. There's a few options there. If you're a smart broker, you can figure that out. But those are the first two places I'm going to ask about. The next for P is property. So I want to ask, hey, just out of curiosity, is there any potential job transfer for you? If you're looking at a promotion, because again, I want to know if that's a possibility and they have a mortgage that's not portable, then I'm like, hey, just so you know, we can sign this renewal. However, it sounds like you're pretty much a shoe in for this promotion. You're going to have to move. You know that the rate that we have today, things don't change. If rates go up, we could, if we select the right mortgage, we could actually move that mortgage with you. Oh, I didn't know that. And so then that would be a property thing. And then the other piece on property is there potential downsizing or upsizing? Well, I'm thinking about selling in the next 3 years. My kid's moving out. We don't feel the space. Awesome. Have you thought about that? That's going to happen. One thing I don't want you to do is there's two is the portability and then the penalty. So those two things you're going to manage when it comes to property. And as you know, some mortgage products have much better penalty and portability options, which if you're thinking ahead for your clients, you're going to serve them better. And I've said this for years, but I believe good mortgage brokers are like good golfers. Good golfers don't just get up to the tee and swing for the fences and use the driver on every tee, even if it's a short par four. You're not a golfer. It's essentially usually it may not be a good idea. They always think about the next shot. They're aiming the ball to where they want the ball to be so that the next shot is set up so that they can have the best possible outcome. That's what really good golfers do. And that's what really good mortgage brokers do. We are always thinking about the next shot. We're not just going, swing, and don't worry about it. Lowest rate is all I care about. And then smack, they're in the middle of they're in a bunker and they're like, oh crap. I got a mortgage that I didn't think about. I got this money to take out. I got a penalty or whatever. And so our job as the advisor is to ask questions. And if you're doing a good job of this, it's mostly going to be asking questions to dig in to find out if there's opportunity and if it makes sense. It's got to make sense. If it doesn't, don't do it. Then you'd be a bad mortgage broker. Don't be a bad mortgage broker. So cash flow, cash out, property, and then product. And then you can get into product stuff saying, okay, based on your current goals, maybe something like, is there a Manulife One? Does it make sense to have something like that? Does it make sense to do a mortgage plus a HELOC or product? Maybe you're going to remove a co-borrower. So maybe you've had somebody that's co-signed for you. Is there anybody who want to remove at renewal? Because there's often opportunities to do that versus doing it midterm and potentially causing yourself problems. And so I'm going to dig into specific products at that point. So it's going to be cash flow, cash out, property, and product. I'm going to go through those four things. If at the end of that, I go, man, you know what? Doesn't sound like there's anything here that we can do to help you. Here's what I want to do is I want to monitor your mortgage and I want to help you make sure that you get the best possible rate over the long term. So I'm going to work with you on your renewal and I'm going to help you get the best possible rate. And I'm going to ask for two things. One, if you have any friends that need my help, please pass them on to me. And two, I'd love to get a review from you. And so if there's no deal for you, I always say there's two types of capital in every deal. There's real capital, cash, and there's social capital. If there's no deal for you, by the way, this is all done in the first call. If after the CCPPR, if there's no deal for you that you can see, it doesn't make sense to pull app and all that other stuff because you're just wasting a whole bunch of time for a file that you're going to lose at the last minute. And you're going to feel frustrated and you go, I hate this job. I hate my life. And now I want to go do something else. Don't do that. Instead, what you want to do is focus on only pick the clients that you actually can serve and you'll be way better off. And so on that renewal, on the renewal piece, so you're going to work with them. You're going to say, look, go get your best possible rate in writing. When it comes back, you're going to give them something in writing that's better. They're going to save a couple points, whatever it is. And then what happens is that they're going to be like, oh my gosh, thank you so much, Scott. Really appreciate you. Awesome. No problem. Hey, can you write me a review? Yes. Okay. Now I've got a review that helps me. Second, any friends that need mortgages, please refer them to me. I'd love to work with them. And then the last piece is if you're using something like OwnWell, which is a great tool for monitoring your client's mortgage equity and buying power over the course of their mortgage. You tell them, hey, look, I'm actually going to monitor your mortgage over the next 12 months or over the next couple of years. If there's an opportunity to save you money, I'm going to manage that for you. Because one of the questions that Jim Talukas likes to ask, which I love, is if who at your current lender calls you if there's an opportunity to save money to adjust your mortgage to save money at your bank? There's nobody. Nobody's going to call you. They're not going to phone you to do this. That's just not what they do. And so the reality is that you can still monitor these mortgages and get opportunities. And by the way, even if they think nothing's coming up like cash outs and there's not going to be divorces coming up, all that stuff's going to happen. And then if you're the person that's there for them, you'll be able to help them on the next one. So play the long game with these renewals. Like don't play there is opportunity. If you do a good job of digging, you're probably going to find more opportunities. You'll find 2 to 3 times more opportunities, but you're going to have to make sure that you only do it if it makes sense for the client. Otherwise, you're just setting yourself up to be one of these in my opinion, scuzzy brokers who pushes people into a product or that doesn't make sense. And then what happens is that it'll burn your reputation. It is never worth it in the long run. So quick recap, CC, PPR. So cash flow. Do they have a cash flow problem that you can use a debt consolidation or REAM? Cash out. Is there any renovations? Is there investments, RSP, top-ups, medical stuff, kids' properties, kids' education? Property, is there any potential job transfer, downsize, upsize are going to change? Product, is there a specific product that they want to make an adjustment to, right? That could make sense, removing borrowers. And then finally, help them renew if none of those make sense, but make sure that you do it in a way that's strategic. Hope you find that useful. As I always say in these episodes, there's no problem in your mortgage business that someone else hasn't already solved. Your problem is finding the answer that you need it when you need it. Our goal with these podcasts is to help you with that. If you want to get on my email list, I share all kinds of tactics and tips for mortgage brokers. Click on this. It's called Peckford's Playbook. Send it out every week. Also, we do a mortgage mindset daily call where we go deep into a topic. Right now, we're going through atomic habits, and it's been a ton of fun with the mortgage brokers that we're getting on these calls. You can check that out as well. Just click on my socials. You should be able to find it. Thanks for listening, and I will see you on the next episode.